Hi, I'm Mitch Rzinski for REIT.com. I'm here in San Francisco for REITWorld 2013, NAREIT's annual convention for all things REIT. I'm joined today by Timpierre, Managing Director of Public Real Estate Securities for Heitman. Tim, thanks for being with us today.
Thanks, Mitch.
In your more recent conversations with investors, what are the most common topics of discussion regarding REIT investment?
I think there are several topics that are of interest for REIT investors. First, it's interest rates and the effects on REITs. A lot of discussions regarding tapering and the conversation of tapering and what it'll mean for interest rates and what it'll mean for REITs. That's probably one of the biggest things. The second, people continue to ask about what's going on with real estate fundamentals. Again, we see real estate fundamentals continuing to improve. The following question is what's happening with supply? Supply is still very low, but we see it increasing on the margin. So supply and demand still feel good about where things are. Third, IPOs. It's been a very good market from an IPO perspective over the course of last year. Probably about 10 new IPOs, generally good IPOs. They've traded pretty well. I think those three things, tapering, supply and demand, and the IPO market have been in the forefront of investors' minds.
And what international markets are catching your eye or attracting your interest?
You know, overall, we have liked what has been going on in Europe, and it's not that economic growth is, accelerating dramatically faster, but it's better. And so we see opportunities in terms of where stocks are trading relative to the underlying value of the real estate. One, two, capital is moving back to the market, so that's going to be supportive overall of pricing. And three, fundamentals are likely going to get on the margin better. So we see overall Europe as an interesting market right now.
What about sectors of interest?
Well, I think the question, as I mentioned earlier, one of the topics that investors have asked about is tapering. For me, it's not if, it's when. And so when rates go up, you're going to have to look at those sectors that can benefit in a higher interest rate environment. And let's just say higher interest rates are the result of better economic growth. You're going to want to take advantage of positioning your portfolio in those companies that can take advantage of higher economic growth. And that would be some of the shorter lease duration sectors, potentially lodging, but also some of those mid to longer lease duration sectors which will which will do well from better demand overall at the property level. Office will do better, industrial will do better, and finally retail will do better. I didn't mention apartments and self-storage, which again I think are both good sectors. The question is they have done so well so far that the rate of growth just may not be quite as strong. The two sectors that we're probably a little less excited about would be those sectors that are just long lease duration sectors, which have been dramatically helped with rates being very low. And that's probably the healthcare sector and the triple net lease sector. Though, from a positive perspective, the triple net lease sector still sees great opportunities in terms of properties to acquire, and we'll see more triple net lease companies potentially coming public. And second, as it regards healthcare, the healthcare REITs have changed over time. Some are still all in a triple net lease structure, but we have seen many more companies kind of take advantage of the RIDEA regulation within the REIT legislation to be more operators. So that helps those companies still generate stronger growth, even as the cost of capital may move up a little bit higher.
Tim, thanks for taking the time today.
Great. Thank you, Mitch.
For more on this and other REIT news and analysis, be sure to visit REIT.com.